Howard Marks of Oaktree. Now, Warren Buffett has given over the last 20 years compounded annual returns of 20%. And Howard Marks came very close with a compounded annual return of 19% over the past 20 years.
Well, I'm not impressed, Lata, because compare this to our Indian mutual funds. What have they done? Over the past 20 years, at least 10 funds have given 30% compounded annual growth rate. Yes, that's our own Indian mutual funds. And it gets better. 3 of them have actually given 50% compounded annual growth rate over a 20-year period. And even over a 10-year period, there are so many mutual funds with 20% compounded annual growth rate.
Yeah. And this is not entirely lost on the Indian investor, as you just heard. The systematic investment plan culture is well and truly growing. And what we understand is that from 2010 to 2013, total assets under management remained practically flat at about 6 lakh crore. But from 2014 to 2016 end, early 2017, the assets under management have doubled from 8 lakh crore to 17 lakh crore, better than double.
Oh yes, and you know what? That explains why. When was the last time we had FIIs selling 40,000 crores in Indian market and the index going up 10%? I don't remember that, and that I think is a lot of credit to our domestic investors. Yes, the mutual funds, but they are managing the money put in by the domestic investors, so hats off to all domestic investors.
Yes, I would assume that this is the coming of age of the domestic investor, but coming of age doesn't mean coming of maturity. Adolescence can be chaotic, as Howard Marks told us, and if adolescence has to be led on to genuine growth, to mature adulthood, then what you need is very good advice. And that's what we are trying to get you from our financial therapists, if I can call you all that. Well, today we understand from the papers, of course, that Mr. Rakesh Jhunjhunwala's total net worth is 10,000 crores. Well, you know, at CNBC TV18, we cannot invest in shares. So we depend on mutual funds. Since you are neutral party rhythm, can these guys make me as rich as Rakesh Jhunjhunwala?
Yeah, well, see, we can try. You mentioned Warren Buffett, so there's a very famous quote by Warren Buffett. He said that I became rich because I was lucky. And my luck began the day I was not born in Bangladesh, but United States of America. Oh. But I think we're plagued by 3 things, as Nassim Taleb would say, you know, 3 intoxicants or 3 habits which really hurt us. The first 2 are very obvious. So that's, you know, drugs, which can be intoxicating and you can get hurt, and most of us should not be there. The second is carbohydrates. We're all plagued by carbohydrates. So that's why, you know, you suffer from all these illnesses. But the third one is what really hurts you, Lata. And that's why you cannot become Rakesh Jhunjhunwala. Which is your monthly salary. If you're willing to give it up, then I think they can make you Rakesh.
Well, this is a tall ask at the moment because I can't see the returns. But what do you want?
Oh yes, so not Rakesh Jhunjhunwala, but Raamdeo, let me ask you this one.
Make us Raamdeo Agrawal.
Yeah, how can I be as rich as you? You are also quite rich. How can I be as rich as you? What should I do in terms of investments?
Have 100% of your savings in equity. That is the first thing. Actually, that's the first thing. Then after that...
You don't own your house?
Yeah, I have a house, but that's it. After that, everything is in equity. And you see, actually, Buffett should be called King of Compounding. That title has, I mean, in any way it has not come. But he's one guy. For 50 years, he has compounded the rate of 20%. And just now you are reeling out information that there are so many funds which has done better than 25-30%. So for you to find one of the managers who is going to do 25%, at 25%, if you start with 1 crore, in 10 years you'll go 10 crores, 20 years 100 crores, and 30 years 1,000 crores, and 40 years 10,000 crores. That's it.
There you are, Rakesh. Yeah. Well, okay, let's begin with how they themselves inculcated this habit of systematic investment. Madhu, narrate to us a story that really inspired you about yourself. A great idea you got, stayed with it, and made money.
So, what do you want? You want a stock idea? You want a mutual fund idea? What do you want?
Stock idea. Anything.
No.
Any idea to get rich.
So, I'll tell you, you know, it's been a fantastic journey with the Reliance Group and with the fund. So when I joined, the total equity corpus was 12 crores. And as Sandeep honestly and candidly admitted that none of us thought, we always were convinced that it's going to be big, but none of us thought that in matter of 15 years from 12 or 100 crores, we'll be managing 3 lakh crores, upward of 3 lakh crores. So it's been a fantastic journey and it's been extremely satisfying. One thing which has remained common between all people who work in Reliance Mutual Fund, now whether you go and ask a peon or a fund manager or a marketing person, is the DNA that we can do it. And we are extremely passionate about doing it. And that DNA has continued to remain, that regardless of the adversity, regardless of who says what, and if you see then in 2006, 2008, 2004, there are so many events when the market fell by 1,000 points, 1,500 points, 2,000 points. And here we are, we were looking for those opportunities that, whenever the market falls, we have to go hold an event in Bombay Stock Exchange, and I used to lead it, like, Sunil, myself, I used to stand up and say that this is the opportunity, you please invest more. So it's been consistent passion and our conviction in India and equities. That is what has led to this success.
Okay. Jakes, I heard you say that you should avoid temptation to trade. What are the biggest investment mistakes that people make and that, you should say that you should avoid if you want to make wealth like, Rakesh Jhunjhunwala or some of the other well-known individuals?
I think the two biggest things is staying with your conviction and accepting that you're wrong, which means actually eliminating your mistakes quickly, taking your losses quickly, and the ability to ride with your conviction, not just 1 year, 2 years. If you see the returns these people have made, the power of compounding comes in by definition when you are invested for multiple years. And to underscore that point, Warren Buffett, who's $65 billion today, was actually $1 billion when he was 53 or 54. So the power of compounding from 53 to 85, and in a private conversation he's actually said that all that he did after that was eliminate in a sense, the foibles of youth, if you will. The mistakes that you make as a youth got eliminated when he was 50 plus.
But what are those mistakes?
Exactly things like this, the temptation to stay with the most difficult thing is to take your loss and get out and say, I made a mistake in an investment. And some of the most difficult things is to say that I'm staying the course year on year, year on year. Look at the winners. Look at, for instance, Rakesh Jhunjhunwala, you're talking about Titan. It's not that Titan has been a one-way run, right? It's been ups and downs through multiple, and every time it's moved from a particular range, it's kind of moved up another 50%, 80%, so the compounding just keeps getting better. So the courage of conviction to stay with your winners and actually take your hits and say, I made a mistake. I think these are two of the most important attributes which can make or break that compounding, if you will.
Yeah, Rhythm, that's an interesting point because, I get a lot of messages from retail, a lot of tweets as well. And the general theme is that people stay invested with their loss-making investments and they book profits, when a stock goes up 10%. In your experience, what should be the holding period? I remember I was having a conversation with you. You said 10 baggers don't interest you anymore. You are now looking at 50 and 100 baggers.
Well, I was always looking at those, but not that I've made too many of them. But, just on the point that Jakes mentioned, I'd like to summarize it in one line. It's about time, not timing. So, a lot of investors get too caught up with timing. Ye bottom aa raha hai, pakad lete isko. But that is, very hard to do. Just spend time in the market and everything gets taken care of. In fact, it also forgives you for some of the mistakes you make. My own experience is actually the mistakes, fall by the wayside because the winners are so massive in size that the mistakes look very small in hindsight. So if you're not even in a position to detect that, it's still not a problem, but you have to spend time. And time, I think, is not about 1 year, 2 years, it's multiple periods of 5, 7, 10, 15, 20. I like to believe it's like your whole life career. So you start investing when you get a job, say at 25, and then you invest all the way till you're 60 and then enjoy the fruits. So say 35 years.
I still think Anuj's question is valid because whether it was a mistake that you should have eliminated or whether you should have patiently stayed through the trough, you know only after the event. You don't know it at that time, and that's why I guess we need expert fund managers to take us through it. So, well, let me get to what launched y'all in the field of fund investment. Raamdeo, let me begin with you. Tell us about one story that you chanced because of your research and one story that you chanced because of luck.
And you can't say Eicher Motors and Hero Motocorp. So that's ruled out.
Okay. So, where we made it because of research was Bharti Airtel. I think, can I go with that?
Yes, of course.
Okay. So that I could see, because right now telecom is very hot and it is very relevant. So, in 2003, India didn't have telephones. I mean, we had about 40-50 million fixed lines in a country of billion people, and we had 50 million phones, and it was almost impossible to get the phones and even for the government to provide despite all the intentions. And here comes without wireless, and you could execute like every quarter they were growing by 100%. The demand was so massive, and yet the stock was available at Bharti stock was available for 5,000 crores at 25 bucks, and that was the only company listed, and incidentally that was the best and the largest. We could figure out when in February 2003 when Mr. Mittal announced that they have broken even, we could figure out in next 5 years this company is going to make at least 25,000 crores, and the stock was available for 5,000 crores. In next 2 years, the stock went up by 50 times from 25 to 1,200. So it happens. I mean, in this kind of companies, and this is the era of internet, everything is exponential, and you'll get a lot of stories, and more so going forward, which will start from 100 crores or 200 crores. You would have not heard the name, and suddenly become global, and it will become few $1 billion. What has taken for HDFC Bank or Bharti or many companies to go travel $10-15 billion or $20 billion, 20 years. It will take maybe 20 months, 20 quarters for them to just go like rocket. Because now the marketplace or opportunity place is global, no more local.
Okay.
Madhu, the problem for the investor or the lay investor is, how do you choose from the myriad funds? In the first place, let us categorize. How do you choose, how does he position himself between debt and equity funds, balanced funds, within fixed income, a whole range of funds, near term and longer term?
So first of all, there are now a lot of very seasoned distributors who are available, wealth managers who are available. My friend sitting here, NJ, who have built such a credible platform for retail investors, and so many other distributor friends who are sitting here. I'm saying, if you are someone who is doing it on a part-time basis, just on a casual basis, कि 400 fund है, आँख बंद करता हूँ इधर लगा के, I should put my money there, I have some half-cooked knowledge. So that is not the way. So there are people who are available. Secondly, if you want to do it yourself, there are, there is a CRISIL, there is a value research, there are lots of people who are available for you to help. The thumb rule which I have practiced, and I have told people to practice, your mutual fund portfolio should not look like you have 50 funds. Otherwise, then you are better off choosing 50 stocks. So you should have a maximum of 10-12 funds in your portfolio. Secondly, that this is one place where experience plays a big role. So you have to go with people who have a track record of investing, because yes, there are a lot of seasonal industries, there are a lot of seasonal funds which do well, but they go off once the season is over. So you have to bet on people who have a very consistent, a good track record of performing. So if you keep these 2 or 3 things in mind, then it is easy to construct a portfolio. But the difficult part is that, when the market goes through a tough, when the market goes through a challenges, at that time you don't listen to your neighbor, you don't listen to what has come, in that sense, print or media, and don't panic, basically. The trick is to just continue to hold on to your investment, having faith in the fund manager as well as in the markets, and that's when you make real returns.
Okay, Madhu, you say, and that's your favorite line these days, investors should ask कितना लेना है और कितने time के लिए लेना है. From your personal experience, one stock that you thought you should have bought more and should have invested longer. Your personal experience.
दुखती नस पे हाथ रख दिया यार. There are so many of them. So when we bought Siemens for instance, we were very early with what Jindal Steel and Power. In 2002-03, these companies were not even heard of. So we bought Jindal Steel and Power when the market cap was 300 crores. And at the peak, the market cap went to 70,000 crores. We bought Divi's Lab when the market cap was 140 crores at the beginning of IPO. At the peak, it went to 40,000 crores. I think if you ask me, you ask the mistake to someone, the only regret which I have looking back is I wish I did not discover many new stocks. And I just kept on buying what we discovered in that time. I think we would have made a Guinness Book of World Record if we had stuck to our investments, what we identified very early on. So the thing was that, we could not buy enough, or maybe we needed this experience which has come over a period of time. So something going a little bit wrong in the company or in the market, or, from time to time, markets really underperforming and challenging our conviction. So I'm sure we have learned, and the next 20 years, we will have a much better performance in this regard than we had in the past.
What's the turning point in your career that made you, as an investor?
Yeah, so I think that's very important, because Raamdeo mentioned at the start that you should have 100% in equities. And, there are people who have 140% in equities because they have debt. And I think leverage is the death knell of investors, because it takes away your flexibility. So I was very fortunate to learn this in 1991, because I was actually, and in those days we had Badla, and I used to trade stocks, and this was well before I started my professional career. I was short Tata Steel. Going into an afternoon session, Tata Steel was going to report post-market, and I think the market started talking about better than expected earnings. There was no CNBC those days. We only had the PTI screen, and the ticker used to come with a lag of 15 minutes, okay? So you were only reliant on the broker for the latest quote. And
so you got the bad news 15 minutes later?
No, I didn't get the bad news at all. I just saw the share price run away from me. And by the time the market was closing, I had lost my entire father's life savings, because I was on a levered trade, okay? At 2:05, I called him up very sheepishly and I said, I've lost everything. What do I do? So he said, what do you think you should do? So I said, we should double up. This looks like, because by then Tata Steel had reported, and I said, it's a blowout earnings, the stock is gapping higher. So he said, do whatever you want. I had lost everything. I doubled up. Next morning the stock went up and I covered, and that was it. I stopped doing leverage trades. And after that I became an investor, and I think that was a very, very good, sasta learning experience.
Jake, any personal experience that you can recall?
Well, personal experience in the sense that the stock market was new to us. I mean, we who came from Delhi actually thought that this was the den of vice, as it was. So I saw it firsthand when I was working in Citibank. And so I learned actually by investing my monthly salary, as it were, into whatever little that we had, into a couple of stocks, Glaxo, this, that and the other. But, I mean, the fact that you could make much more than you could make, at work, in a sense, tempts you to say, can you do this on your own, and so on and so forth, and hence, the move to Prime, etc. But I think the real takeaway from this is that you have to make money where the crowds aren't there. So the important issue here is not so much, so sometimes you can call it the arrogance of youth, you can call it the arrogance of intelligence or whatever limited you think you have, that you want to go out and, that's where, so my fetish, if you will, is for small and unknown, unheard of stocks, and that which you have to do a little more work on. And I think that's what, set me on the path to trying to discover some of these.
One thing which I didn't mention is that this was May of 91, so you guys will have no idea what happened after that. The Sensex
Manmohan Singh happened around 91.
The Sensex went up 5-fold in the subsequent 9 months. So just look at my luck here.
Okay.
I was 11, so I won't know.
Madhu will remember that. It went from 900 to 4,500 in 9 months.
Really? Okay. Well, this was...
no more.
I think we have to take a break on this note. From episodes of, from your own personal lives, we are news birds, and now we want your reactions to the news that's happening around us. Rhythm, let's start with you. What will Trump do to the markets? Are we Is he going to create a trade war and therefore spoil the good game that's going around in equities all over the world? Or are the next 2, 3, 5 years going to be good years for growth and for equities?
So, Lata, I think sequencing is important with respect to the US President's policies, and there is not enough clarity right now for me to actually make that call. At one end, he is likely to offer tax cuts to corporate America. At the other end, he's going to probably levy a border adjustment tax. Though I felt in his last speech, he has diluted the impact of that or his intentions. So depending on the sequence, it will determine how the market behaves, say, in 6-month time frame. But I don't think the market will care that much, because right now we are in a global reflation trade. Global growth is heading higher, global inflation expectations are heading higher, rates are heading higher. This is a good environment for equities. So you can see that rub off into India. 80% of what's happening in India since December is global. It's not local. And you can see the correlations are high, and global economy is actually surprising on the upside.
Okay, we have Varinder here in the crowd. Yes, Varinder, please.
Hello. Yeah. I can't resist my temptation of asking Mr. Damani this thing, and a very simple question, sir. What is the mantra, for investing? What have life taught you, and what can we all take from your experience?
Thank you, Virendra. Thank you for having me out here. I think a lot of people can be successful picking stocks, and the biggest mistake I've publicly acknowledged in my career has been the inability to write big. When you have only so few great ideas in your life, and when you have one of those great ideas, you really want to make it count. As Buffett says, back up the truck. So the advice I give to young people, yes, do your research, get your stocks right. But when you have a great idea, you need to back up the truck and buy.
Well, that's very thoughtful advice from you, sir. Thank you. I'll come back with more.
No, but give us one great idea, Mr. Damani.
I think it's United Spirits. I remember, he telling us long back.
There have been many. I mean, this market has gone from index of 800 to 30,000 almost. So there have been tons of hundreds of baggers that all of us have seen in our careers. So, and there'll be more. The good news is there'll be a lot more coming over the next few years. So, but the key thing to remember, to be filthy rich, is you remember to back up the truck.
Okay, Ramesh, is that, is there a bit of a personal experience here? Because United Spirits, I remember you identified at what, 50 crore market cap?
I don't want to talk about the personal. This is a personal lesson. He asked me the personal drawback of my career, and I would say that was the biggest drawback of my career. The way to get rich is to buy lots of big blocks of stocks and hoard them, like some successors, like Buffett does, for example. So a lot of us get good stocks right, but the ability to sit tight and ride them on a big position is a skill set that the next generation also needs to learn.
So my last question, sir, what is the mistake any investor should not do, from your, whatever you have learned?
I mean, first, not write big, but the second, the most important lesson that it liberated me when I learned it is the power of compounding. If you double your money every 3 years, you can start with 10 lakhs and end up with 25 crores. It's that simple. So why go through all this nonsense of tips and inside information and so many other things that, we get tempted by, when you can start with 10 lakh rupees and you're 25, as Rhythm said, and by the time you're 50, 30 years later, you're worth 25 crores. That's $4 million US. That's rich anywhere in the world.
Okay,
compounding is the word. Okay, from
yes, compounding. That's of course Ramesh's favorite
something,
word.
Ramesh, it doesn't feel that way when you're a mutual fund investor. Now, I don't know, I can't remember since when I've been investing, but if you look at a rolling 1 year basis, median earnings, it usually looks like 7-8%. It looks very much like debt. This compounding, there are long periods when, doubling your money in 3 years doesn't work. So, Madhu, what is your advice to people who may have probably come in 2007 and looked at it in 2008, 2009, 2010? Where is the doubling? The capital is lost. How will you advise them?
That's what now. Convenient. You can choose a convenient point that you have not made money if you came in 2007. I will choose a convenient time that if you came in 2002, you have made enormous wealth.
Yeah, but how do you reach out to investors? Because there are vast hordes who, probably shy away because of this experience. that they have waited it out. Probably it was an unfortunate choice for them. And you know, it is usually not unfortunate. It is usually sequenced that way. It is only when markets are at all-time highs that mutual funds, investors, media, everyone are talking about stocks. White papers talk about stocks. So you often are in a situation where hitherto non-investors come into investment at that time. So what's your advice to investors?
So that's what Lata is. I think at least we have been very consistent, and I've been interacting with your channel for last 10 years. Whenever there is a panic and you call us and we say that this is the time to buy, we're not advocating people that, you know, when there is a euphoria. See, we always have been saying this, either you get good news or you get good price. If the news is fantastic, conversely, there has to be something wrong with the price. And if the price is fantastic, the news will be bad. So I am saying you have to just consist. It's just a sheer bad luck that you first time invested in 2007. It's just a sheer bad luck that, you know.
You hear about mutual funds and investments only at such times.
No, but that is why this mutual fund day, that's why Sandeep's biggest idea that it should not be an event of a 9,000 Nifty. It is to be a consistent. Every 7th you say, for the next 25 years, I am going to invest. I have faith in India. I have faith in Reliance Mutual Fund, and I have faith in HDFC. So these are people who will make enormous amount of wealth. So it is to be a habit. You cannot just casually treat this. It's a serious subject we are talking about. Making money is not non-serious, not like watching a movie. It's not like whenever you decide that you will come in, whenever you will decide you will go out. So I am saying you have to have some conviction. And the conviction which I am imparting is that you have to be consistent. If you are an SIP investor, don't worry about what has happened in the market. You come, every month you put money, over a period of time you will realize that the returns are better than what you expected.
Okay, Raamdeo, so is this a roaring bull market now? Every correction is getting lapped. I was having a conversation with Rhythm. I said, is 50,000 likely? He asked me, are you talking Sensex or Nifty? So from here on...
Combined.
Or combined, wow. So, I mean, what are we talking about in terms of a bull market? Do you see much higher all-time highs now from here on?
Sincerely, it is very difficult to say that markets are headed very high. I mean, it surprises me every point of time whenever we try to figure out where the market is headed. It's much easier to figure out. I mean, that's my personal style. I'm continuously looking for ideas, and I keep trying to look for an idea which is a compounder. See, what is going to compound? Underlying business, does it have an opportunity to compound 10x in next 10 years? Does it have a management which can kind of hold that kind of compounding? Can it provide that particular kind of management as well? Whenever I find compounding, and I have seen you get compounding ideas in good time as well as bad time. Because these companies, they come at their own pace. They're not waiting for the market to go high to get born. These are all business cycles. So I think bothering about a bull run or mega bull run, which were used to 92, 2000, 85, 92, 2000, 2007. So I've seen 4 of them. And a lot of money is made at this point of time, but a lot of, as you were saying, that 2007 people who come in, a lot of people have bad experience because ultimately they get in at the right close to the peak of the market. So better that the bull market, like this kind of mad bull market, doesn't come. We have a nice warm market, what we have today, and let the market move 12%, 13%, some correction, again moves 15, 20%. I think that's much better for the economy, for the investors, for everybody. But the nature of the thing is very different. It will happen, and it will be much bigger. This time, whenever it happens, maybe 6 months once, 2 years, 3 years, it will be much bigger.
Can I just add, the opportunities are there in every market. So we talked about 2007. Just in a hindsight, and in 2007, at the peak of the bull market, the total market cap of the pharma sector put together was 1 lakh crore. And at that time, DLF's market cap was 1.5 lakh crores. Okay. 8 years down the line, the total market cap of pharma industry was nearly 10 lakh crores, and DLF's market cap has fallen to 25 or 30,000 crores. So I'm saying we have to, if we just have conviction in this, that we will find ideas in every kind of market. So we don't have to really wait for a real 50,000 Nifty for us to make money.
Well, we have a lot of more questions which we will reserve for the mutual fund managers who are going to join us. But what the hell, it's a Friday evening.
It's a Friday evening, yes.
Yeah, so we have to have
There's
a
one
rapid
thing-
fire round.
Yeah, before you go to rapid fire, actually, Lata, there's a question which only I can answer. So you have to ask me that question because all the other people have vested
I've
interest.
heard of people leaking the question paper. I've not heard of people setting the question paper and answering it.
This is a question which everybody in this audience has. And I'm surprised it's not coming up because it comes up to me. So the question is, and people are asking this question, and this has reference to a few statements that Warren Buffett made recently and Charlie Munger has been making for 23 years, that don't bother with active fund managers, go index investing. So a lot of people ask me this, that should we also do this in India? And my very firm answer is no. Don't do index investing, back active managers, because in India we still have a bunch of inefficiencies in the market. This is the 50s and 60s and 70s in the US, not the 90s and 2000s. So that moment will come, maybe 10 years, 15 years, I don't know when you have to abandon active managers and go to index investing. But my confidence is that the bunch of active managers we have today are capable of delivering better than market returns over the next few years. So I think it's a very important thing because a lot of investors are asking this question, and I think Sandeep referred to ETF growth. And I'm actually disappointed that ETFs are growing because I think that's a missed opportunity for retail investors. They should actually be backing active investing.
It's a great answer. It's a great answer, but then you've taken away my question for the next set of fund managers, yaar. This was my question.
And you know what,
They have vested interest. So they will obviously answer in favor of active management, and then so I think I have a slightly more credibility. They are all my clients. So again, people will question.
There is no vested interest.
Yeah, but I'm not backing any specific individual here. I'm just making a general comment, and it's a genuine comment I'm making. I think there is still some active alpha to be extracted out of India, which a professional set of manager can do for you.
Okay, Vedant, thankfully our industry does not pay as much as yours, because otherwise you would have taken our job away. You're I think the best business anchor that we could find. Okay, let's start the rapid fire. But before that, let's do some fun. It's Friday evening.
Go ahead.
We have. I think all of you love to sing. That's something that I know. Jake, let's start with you. I know you're a very good singer.
If you're on the same stage as Raamdeo, he being my guru, he has to start.
Okay,
we will follow suit.
Okay, let's
Raamdeo,
start with you. Yeah.
Everything will be spoiled. Please, you really want me to sing?
Yes, we do.
God.
We will all join you, don't worry. You can sing the theme song.
चौदहवीं का चांद हो या आफताब हो, जो भी हो तुम खुदा की कसम लाजवाब हो, चौदहवीं का चांद हो.
Wow. Okay, Arijit Singh has a competition. Raamdeo Agrawal. Big round of applause, guys. That was really nice.
Oh, Jake is giving him competition.
Well, I don't know about competition, but given the fact that this is a mutual fund day, I think this song in its truest sense may actually be testimony to the fact the industry is growing, and that it will grow through the active fund managers. It will go on to much greater heights, well beyond active fund managers. So if you look at the deeper sort of meaning of this song, which I will endeavor to sing.
Paisa, ye paisa.
No. It's much more subtle than that. Aaj ki raat mere, which is my testimony to the industry, right? I mean, my salute to the industry. Aaj ki raat mere, dil ki salami le le, dil ki salami le le, kal teri bazm se deewana chala jayega, शम्मा रह जाएगी परवाना चला जाएगा, आज की रात मेरे दिल की सलामी ले ले, दिल की सलामी ले ले. Thank you.
I think that's an elegant salutation to the fund managers, I must say.
Madhu.
Rhythm, we know that...
I don't think so.
Rhythm, we know what is your passion. Your passion is weightlifting.
Yeah, he's coming out of the gym. I think.
No, I can't do
Dead
deadlift.
weight. Okay, dead weight.
Everybody should deadlift once a week.
Deadlift.
Deadlift once a week.
What is deadlift?
Yeah, Lata didn't know what is deadlift. I'm sure everybody out here knows deadlift.
No, please, we want a demonstration.
No, deadlift. I'm getting close. See, if I don't do this, she'll make me sing. Yeah. So you go down, back straight, right? Do that. 15 times, your heart rate will go up. Without weights.
Okay. A round of applause.
Well done.
Madhu,
Well.
any shairi or song from your end? You also sing. You sang on my song.
I
on my
already
show.
sang for you, yeah.
Yeah, but you can,
And after
you can
this,
sing once more maybe. Yeah, once more.
Once more.
As Jake said, this song was sung by Mukesh for someone. I am singing it for Reliance Growth Fund. कभी कभी मेरे दिल में ख्याल आता है कि जैसे तुझको बनाया गया है मेरे लिए, कि जैसे तुझको बनाया गया है मेरे लिए। तू अब से पहले सितारों में बस रही थी कहीं, तुझे ज़मीं पे बुलाया गया है मेरे लिए, तुझे ज़मीं पे बुलाया गया है मेरे लिए।
Okay, audience, a round of applause, please.
Only his wife will be disappointed because she assumed this was always for her.
Well, Raamdeo, Madhu, Jakes and Rhythm, thank you very much for making this a great evening for us. From all of us, Hamari Dil Ki Salami Le Le.
Thank you so much. Great Friday evening. Thank you.
Fantastic.
Thank you. 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 Thank you.